Markets have returned to where it all began. The most traded zone is about to be hit, and in today's video, we need to talk about big earnings season. With over 40% of the S&P 500 happening in 1 week, this could be the wildest event of 2025. In today's special weekend edition, we'll take a look at what's going on in the bonds market and why you may need to be watching this chart more than any other. Yes, we've got the data, we've got some amazing stuff to share with you, and more importantly, we're looking at where Wall Street has been placing those positions. Join us as we cover stocks, commodities, and cryptos for what is going to be a blockbuster week. Well, welcome back everybody to the special edition of The Daily Show. My name's Tom, and in today's video, we have a lot to discuss. The latest macro, the huge data reveal that will absolutely blow your mind, and of course, the key levels that we've got going on right now. That's not even to mention what just happened over this week with huge semiconductor moves, Wall Street moving into big technology once again, and even banks coming along. What does all of this mean heading into one of the biggest earnings season reports ever recorded? And why do we say that? 40% of the S&P 500 by market capitalization are basically reporting this week. And that means that what happens on Wednesday and Thursday is going to matter for all of us, let alone every other session. Could it be a buy the rumor, sell the fact style event? Or is it something a little bit different? Well, of course, as we hit resistance, as you'll see later on today's video, we come into the most traded zones and we expect some massive dark pool liquidity. That is potentially secret transactions between Wall Street traders during these events. So stay tuned, make sure to subscribe if you're interested in that stuff. Let's kick things off though with what the internet is talking about. And that is of course the super Zweig thrust or the Zweig thrust signal. Now, we saw this, of course, many times over the last couple of years, and we've reported on it during each of these major periods. The thing is, it's pretty rare, and usually it's very bullish. In fact, 1 year later, when you tend to get these reads, 100% of the time in the past, markets have been up. The question is, will it happen again this way, or is it manufactured by someone like the algorithms on Wall Street? Well, the reason I say that almost in one way is because, of course, memes are being made about the Zweig thrust, and I've just never seen more people talking about it. It seems like everything is just out of the bag nowadays, and everybody on the internet seems to be very well aware. But this is a very good signal. And what makes this signal even better, in terms of not just the stats you see here on the screen, is that we're getting it across the board. According to Grant Hawkridge, we also have more breadth thrusts, and I'm seeing the same thing. 70 thrusts, Zweig thrusts, and of course a few others. They're all starting to stack up to make this one of the better that we've seen over the last kind of decade plus. And this means that we can start to break down some statistics about what might be happening over the next 5 days, 10 days, and then of course 6 months and 1 year. And while the longer term stats look very good, just remember it can be a little volatile, specifically around periods such as 2022, when we were in a bottoming structure, that we can see markets actually still sell off kind of considerably. Now, this may make sense to the analog that if you've been watching our videos recently, where we've talked about how a market could sell from this zone and then still be very bullish now that we've got these reads. Now, let's go through a couple of other good ones, including Wayne Whaley's latest data. Yes, Wayne's back, and we've got a good one here, which is, of course, the last 4 of 6 days being over 0.5%, and the last 3 of 6 days being over 1.5% move. Now, this is his 6-day move-based statistic, and you can see here again, the stats are very good when you look at 12 months, and pretty decent when you look at the next 1 month themselves. Now, can we still sell off? Well, you can see here, quite a lot of those reads actually lead into a little bit of a sell-off, but it is, again, a very bullish statistic. And it comes with the same stuff here as Subu Trades one, which is the NASDAQ going up over 1% for 4 days straight. It's been a hell of a ride back to this most traded zone. But again, could it be a buy the rumor, sell the fact on earnings, or maybe more so sell the fact on forward earnings. That is, what is the forecast in the future? We've already seen some companies coming in and saying, oh, we don't want to make forecasts this earnings season, or it's too uncertain, or any of those types of things. Well, here's where the damning stats happen. What happens 1 day later? What happens 4 days later? 1 week later? Yeah, only a quarter of the time sometimes are we actually bullish after having such a great breadth thrust. And this makes perfect sense. The market has to take a breather, it has to scare people out, and then of course it has to potentially resume the trend. Now, why is this important? Well, when we have a look here at things such as the overlays, such as Netscape versus ChatGPT, that one of our favorite overlays that we look at all the time, thanks to Bespoke here, you can see that it kind of lines up pretty well with those 1990s narratives. Now, if you've been watching the channel, you would know that we've been specifically looking at this one, which is one of the fastest corrections of all time, and of course, how we've been trading. Now, guess where we find ourselves right here? The exact, as it says here, scene of the crime, which I guess is Liberation Day in terms of the tariff discussion. And you can see here that we are right getting into that close area where the sells tend to have occurred in the past. Now, that's ended up usually in a sell-off that then has ended in a double bottom. Now, funnily, because we have that Zweig breadth thrust, because we have the 7070, because we have so many good signs here, even now if the markets go down, algorithms will be incentivized to buy up along with those CTAs, so those commodity trade advisors, which we already know were meant to be buying for April and have only just started. So remember, they tend to be buying. We've got buyback windows as these companies, of course, do their earnings season. Guess what? Buybacks come in. Okay, they're maybe not as big as they have been, but guess what? Google just announced a pretty big buyback as part of its earnings. So things are changing here in terms of some bullish lights are coming on. That doesn't mean, though, that volatility is gone. Remember, the VIX is high and the chance of volatility is still pretty big. Now, one of the things we mentioned only a week ago or 2 weeks ago now was that we, of course, saw the percentage of S&P 500 stocks get thrashed to really low levels. And that notoriously has been a capitulation zone where we generally see structure form. And our thought process was that we would see structure between a 4,700 zone and exactly where we're starting to get to, which is a 5,600 zone. Obviously, that's a large range, but that we would see structure form throughout that, as has historically been the pattern in the past. And it seems to be going that same way. Regardless of the news, we've now know a couple of big things. We now know, number one, that as soon as the 30-year, 20-year, and 10-year yields get close to those resistance peaks, either the Federal Reserve or potentially the US government are going to blink. And as soon as we got that information, you could see the market started to do a couple of things. Particularly, they started to buy treasuries. Now, I don't have the chart here. It's in our link down below in terms of our X account. But you're going to see that treasuries just saw the largest inflows, it's completely free over there, by the way, the largest inflows in literally, I believe, pretty much for years. And that's funny, isn't it? Because all of a sudden, a few weeks ago, everyone said that no one wanted US treasuries anymore. So funnily enough, everyone went into treasuries when they saw the plunge protection team and the US government say, oh, we don't really want the yields going there anymore. Bam, puts a floor, puts a put floor effectively against that particular trade. We'll look at that later on in today's video. Now, another thing that's happened here is energy has seen monstrous outflows. Take a look at energy here. It's been getting absolutely thrashed. Everyone hates energy. It's just down big time. And that's because, of course, there were concerns over growth, concerns over what the tariffs were going to do and everything else. Historically, when you get that oversold, often it can be a contrarian indicator. We'll look at the oil price a little bit later on in today's video as well. So you can kind of get an idea that the market is pricing up potential structure while everybody is absolutely terrified of it. Now, let's talk dark pools for a second. Let's go through some of these big transactions from Wall Street. Now, we know that last week there were certain things going on. And of course, there were certain announcements being made on potentially China tariffs being reduced and all sorts of things happening. And during that session, we saw massive trades. We saw some of the biggest sweeps, which basically means really fast transactions that were done in a hurry, that were all dark pools. That means they were done between big, large institutions off usually the normal market. So they were off market effectively. And when these come in, they usually mean something. Now, they were happening quickly, and then we can see the results. Where do we find ourselves now at? Around this price. So we're getting into that most traded zone. So what do we expect here? Well, we actually expect, if we are going to find resistance, potentially some take profits. And this may have already started to happen on some pairs. In particular, Tesla, which obviously gave one of the worst earnings it's ever done, but at the same time, people bought it up. And that's what we call a sell the rumor, buy the fact. Even though the results are terrible, the market was at support, everyone was bearish, and the market then rallies. Well, did it just hit a TP zone? We saw a monstrous transaction here on the 2 times inverse Tesla daily, which I think is a very, very interesting one. Possibly they're looking for some kind of short there. And I also noted over on our X account, there's a fairly large transaction came through at the peaks there near the close for Tesla, which just so happens to also be around that resistance area. Another interesting one will be what's happening on silver, which is a pair that is really not done as well as gold in recent times, but it does have a lot of transactions on the iShares Silver Trust right around the same level. So is this an accumulation or a distribution? I think we'll find out in price action. If I had to guess right now, I'm hoping for the accumulation side because the market looks a little bit more bullish than bearish. Now let's just quickly talk about gold before we get back into earnings, before we get back into the general market indices and options flow. And you can see here that the only reason we bring up gold at the moment is not so much that we've been super bullish on it for, of course, 2.5 years, but that we turned a little bit more negative on it about 3, 4, 5 days ago now. And the reason why that was just everyone was piling in. Remember, when everyone piles in, you often go into consolidation. And you can see here, global gold ETF flows were showing that capitulation was happening on so many markets. And gold silver, particularly gold silver, got to some of the worst levels it's been in years, which means that silver is now historically undervalued. Now, take of that what you will, but when we see gold do this, when we see silver do this, often silver can improve. And at the same time, we also often see Bitcoin starting to improve. And this, of course, was making the rounds. We first reported it literally, 2 days later, Bitcoin went up like 7 to 10% or something like that, some obscene amount straight away. So again, it just shows you that, yes, it could be that people are trying to stack into Bitcoin on this kind of run, and maybe they're feeling a little bit more bullish about it. Now, to keep in mind here, even though everyone's going to be going bullish and going absolutely wild about these wag breadth thrusts, because look, the stats don't lie. They are what they are. They're very, very good. Don't forget that a recession can still actually happen when we tip a bear market like we did this year. Now, what that means is the market can come down. Remember, we expected a 10% sell-off in Q1. We didn't know why. We just thought it might be overpriced market or some scare. Turns out tariffs pushed further. We hit 20, hit the technical bear market. Now, we could still see something like this, make a new all-time high, and still have done enough damage to end up causing a recession. And it's also the nature of tariffs that can cause that. So don't forget about this chart. I keep putting in, I know a lot of you say, oh, get rid of that chart, man, ways to bring that up. Because it's important to note that it's actually statistically unlikely to have more soft landings. Soft landing after soft landing after soft landing. Yes, it is in some ways a manufactured potential recession here. But just remember, if tariffs stick, the longer they stick, the more damage they do in the future. It's not going to show up right now in these earnings. We already expect these earnings to be pretty good. But again, markets have done that. Could it be, again, buy the rumor, sell the fact? Here are some of the expected moves. Take a look at Spotify on Tuesday here. Expected to move between 10.5% plus or minus. Starbucks 8 to 9. That's a big move for Starbucks. You got Meta moving 9.5 to 10. I mean, these are just hundreds and hundreds and hundreds of billions of dollars of expected moves based on the options market. This is just going to be wild. Apple a little bit lower here at plus minus 6. Amazon expected to be 7.5. So it is going to be a blockbuster week in terms of earnings. And we will be watching all those options markets. And what we might do, if you're interested, let us know in the comments down below, is we might look at some of the biggest names and see what the options market is expecting in terms of where the moves are. And more importantly, why that is. Of course, where are the cheaper kind of options trades that could be there? maybe we'll have a look at that. Now, let's go and check out what's going on here when it comes to the flows. The flows on Friday were risk on. You can see here consumer discretionary and staples and semiconductors. That now backs up 5 days of risk on. So since we've started to see this breadth thrust and really the idea that maybe the tariffs will be reduced, everything's gone ballistic. And that is the type of thing that often you want to see if you're a bull in markets. You want to see risk on because without big tech, we are just not going to be able to get rallies to all-time highs and continue on. Some other good signs for the bulls, little bit of injection here from central banks around the world. So liquidity was moving up and we'll be tracking that very hard this year. So make sure to keep watching for that one. And you can see here as well that the stock market managed to get above 5,500 on the weekly close. Now, why is this important? Well, it presents the idea that we can get to the 5,600, which is the most traded zone, and the 5,670, which is the gap fill from, of course, all that Liberation Day stuff. Now, this area here will matter, guys. I mean, this is a big deal. I mean, you do not know how many trades I expect to come in through here. Now, why? Because this is going to be dark pool zone, okay? There will be a lot of trades. I believe that there'll be a bit of TPing going on. I wouldn't be surprised at all to find some resistance somewhere here. And the sneakiest thing would be if the market did this and then rallied a new high, getting past 5,800, as that will trigger so many buys. And I could just expect it to do something like this if that happened. Now, this is, of course, going to be such an important area. So make sure to sub. We'll be following this one. Let's have a look at the futures market here. You can see the futures is the same thing. Options high, options low, 5,450, 5,600. Funnily enough, is also the Monday options high level with the most traded zone. So basically where Wall Street had placed all its previous positions seems to be where we're going to get that options high potentially as well. We did close at the high, which again is a decent sign. There's no signs of weakness yet in this market. I personally would be expecting that generally we would move up further. Now, there's no guarantees in anything in life. It's just that the price action is potentially showing that at this stage. And as I often say, it's all about finding your edge in markets. And then, of course, going with that. Markets move from what we call equilibrium to the next level of equilibrium. I teach that in our day trading masterclass, which we've got a sale on in the links in the description down below at the moment. Now, let's have a look here at the S&P in terms of what's going on with options flow. You can see 55.50 being a very well struck call for the Monday session. And then if we go over to the Tuesday session, it starts to kind of dial up there a little bit more, 55.65, 5,600. We start getting tons and tons of calls. And remember, if we move past these levels, we enter into positive gamma for the first time. So yeah, it gets even more weird when you look at the 16th of May, but that's because so many puts were stuck there from the last couple of weeks. But you can see here that this week in particular is absolutely hammering with calls. And I expect them to really start to hammer that 5,600 level, and potentially it causes what we call a call wall. Now, when you have a look at NVIDIA, we're already entering into positive gamma territory again, which is great for the stock. And of course, 115 is the next target, then 120, then 125. Every $5 increment will matter for NVIDIA. When we take a look at Tesla, yeah, it may have actually already come to a very important point. Now, we saw a large transaction near the end, but remember that 280 to 300 zone is a resistance. It's a sell area. We'll bring it up later on in the charts, but in terms of what we've seen traditionally, we've seen some selling go on around that zone. Now let's have a look at more good news and then some bad news. First up, we've got the US 30Y, and when we take a look at the charts, we're underneath 5%. So is that good? Yes. If we get back to 5%, what do we have to expect? The plunge protection team or the US government to potentially blink. They're clearly just watching the bonds market. So when bonds are happy, everyone's all good. When bonds are freaking out, everyone's sad. And that's going to cause the market to absolutely tank. So just remember, I don't even know if it matters too much about what your opinion is on the markets right now. It may just be just watch the bonds. And when they're freaking out, if their plunge protection team isn't there, yeah, it's going to get nasty pretty quickly. You can see here as well, options, markets, and bonds. So in terms of high yield, they've dropped off, which is again a good sign for recovery, which we've been mentioning. Now, what about treasuries? We can see here that treasuries have bounced off that area we marked as the potential bull zone. Why? Well, it's been a very strong buy in the past. You can see the volumes are very, very huge down here. So yeah, I mean, there's a lot of action going on in treasuries. And I guess for a lot of people, they may think this is a Fed put or a US government put down here now. So that could be why it's getting a bit of attention as well. If we have a look at the VIX, it's dropped drastically now. We're back down to 24.84. So that's still high, but it is, and it still means there's volatility, but obviously it's reduced quite a lot. And what tends to happen is you'll often see kind of like a secondary spike, and then that is likely the peak panic, though, for now in terms of structure. That's just usually the way it plays. What about the US dollar? Well, it's in support. So we've mentioned this several times. It's like that hidden level of demand over here. And at the moment, it's forming a pretty good level of support. And that put a bit of pressure on things like gold, which I still don't really feel great about here in terms of structure. Look, if you're going to hold gold for years, sure, I think it's fine. I think gold will go over 4K plus, easily. But the thing is that it's all about timing, isn't it? So one of the things that we thought up here was that gold was going to have a breather. And I'd like it to just kind of do this, I guess, in the future. So, yeah, we're looking for this to consolidate a little bit. Silver, on the other hand, didn't quite do what we'd want for the weekly. The weekly wasn't that strong. We ended up coming back down. We're still on a higher high, though. We're still in an upward trend, and we know there are a lot of transactions through here. So, watching carefully silver, still hoping that thing can start to play catch up. US oil, everyone's negative on energy stocks, but at the same time, you've got this oil potential inverse head and shoulders. It's consolidating, really needs to break 65 a barrel plus this week. If it can't do that, it could be going back down. But for now, the bulls are technically in control of the chart. Tesla hits the resistance at 280, 285. You can see here the previous resistance level. We're now in the danger zone for the Tesla bulls. And it was a great run. I mean, if you were on that run, congrats to you. If you managed to pick up like a 225 and you ran it, it's a 27% week. I mean, that is just, you just don't see that very often, do you? But it seems like in 2025, we get that every couple of days. Now, this could be the chart we have to watch. We've talked about it forever. Semiconductors versus SPY. And I'll show you why. Let's go higher time frame here and have a look. So this obviously was a horrible break. This was very, very negative for the markets. Now, you could definitely argue head and shoulders. You can argue all sorts of badness. Are we out of the problems yet? No, but we do have a nice downward trend line. We obviously want to break a 0.4 ratio in the future to get the semiconductors back in space. But this is such a big deal. Look at this, coming right into that resistance ahead of earnings of everything else. And yeah, wow. So we will find out a little bit about whether this market's real or the real deal or not very, very soon. The other thing that we're looking at is going to be the most traded zone and 123-ish from NVIDIA. So, of course, we'll be watching that very closely as well, guys. And HSI, which continues to be in the middle. So, obviously, the Chinese market, not really loving everything right now. It's not really hating anything. One thing we will bring up on the show soon, we've got so much other stuff that we had to cover, is, of course, the continuous liquidity injections from the Chinese government into obviously China. I don't expect that to stop, and it's going to blow your mind when I show you how much they're putting in. It's just unbelievable amounts. Price action wise, though, no real edge there at this stage. Do we have the US 2K breaking up? Yes, we do. Is that good for breadth? Well, it shows you small businesses are coming along too. It's not just big tech, and that's good. So, of course, here you can see that 2000 is probably going to be a bit of a resistance, 2010. And what we're starting to see is a bit of correlation. Most traded zone, NASDAQ, 19.6, 2000-ish, pretty important. US 2K, which is the Russell. And then, of course, 5,600, pretty important level for the S&P. That's what we call correlation across the board. What happens here may matter. Dark pools will matter. Is it a buy the rumor, sell the fact? We'll have to find out. But obviously, we're probably going to be looking for structure this week to figure out the next big move. When it comes to Bitcoin, it is likely in resistance or supply at this stage, and it was just so fast. I mean, we talked about it down here being bullish, and then boom, it just went straight there 2 days. I mean, some of these markets are moving so quickly to the next level, and then they have to consolidate. So it's grinding up. You can see here it's dull. Usually you don't want to short against a dull market, as they say, but at the same time, you need to be aware you're in the danger zone. So you can't not expect this type of thing or this type of thing, okay? But things are looking better. New higher high, that's a big deal. And of course, that's better for the cryptoverse as things were looking a little bit shaky. We'll bring the calendar later on as we see Monday close through. But realistically, guys, the main thing to look out for this week is earnings and, of course, any results information coming out of the US government or the Fed. Everything matters right now. More importantly than anything else, though, you've got to get your risk management in control. If you're interested in finding out more about how we create replicable strategies, check out our 7-day flash sale. Follow us on X if you want some of the extra charts. And of course, subscribe to the channel. In summary, I guess the thing is here that you can see that things can change just like this. At the same time, I think this one needs to be remembered. What's happening here right now, what has been happening, is certainly damage to, I think, many parts of potentially the economy. And you've got to consider that even if the market goes off and says everything's all good, you've always got to start questioning those situations. And of course, here on the channel, we're really questioning a lot of stuff right now, specifically around the structure. So as we hit this zone, well, we'll find out whether the bulls or the bears will win. And I expect it to come down to dark pool liquidity. And as always, some great technical analysis and data. Thanks so much, guys. We'll see you in the next one. You have a fantastic weekend. Bye for now.